I guess you get this question a lot in your line of work, but how does one get rich?
First, we need to ask yourself, well, what do you mean by rich? He used to say life is a game. And the first thing that you can do is increase the map of your area. So what you can do is obviously get out. I never thought about starting my own company. I was happy in the job. It was doing well. I climbed the corporate ladder over the years, but at some point I felt very, very stuck. But I was 25, 26 years of age, and I was not growing. So there was a lot of startups in my network, and I'd made connections before. Every books I saw, or everybody, all my friends, companies, all of them were kind of struggling with their books of accounts. I was not thinking, of course, because as an entrepreneur, you're so busy, you're always running around, you're looking for your salespeople, for your product, this, that, and it's always the appointment with the accountant that gets moved or canceled last minute, So when I remember, when I had no money coming into Rwanda as my first job, and that was so much below of my monthly revenue. But if you want to save and if you want to have enough savings to be able to buy a house, you need to start asking yourself, and the numbers can be scary.
Wait, you were spending only 10%?
Yeah, that means it's going to take you 10 years, close to 10 years to save 250. With your current income and your current expenses, tell me in your circle who's saving 2,000 a month, I'm not even talking about being rich, I'm just talking about having a house.
With this new age of social media, it's really hard for a lot of young people getting into the job market to, save or live below their means.
Everybody should stay away from this social media influencers who are always like, hey, follow me. Those are scams. There's no shortcut to becoming rich. Even if you make more income, but you do not stay below the level of what you make, you're never going to be happy and you're never going to have enough. So really rich people do not try to show off their wealth. It's the opposite. The people who try to look wealthy are actually not that wealthy. I have nothing against going out. It's just keep your expenses below your means.
It's like, what does below your means mean?
First, look into that.
Welcome to the podcast.
Thanks for having me.
For the people who might be watching or listening, who might not know who you are, can you tell us a little bit about who is Akash?
Sure. I'm a CPA by profession. I manage an accounting firm in Rwanda. I'm originally from India, but I've been living here for the last 7 years. And that's it.
What got you into finance, into the world of finance or accounting?
It's an interesting story. I was actually a science student, and then I didn't do well in my exams. So when I got out of 12th, I was thinking, okay, I didn't study well. I have no future prospects. So all my close friends, they were giving CPA exams at the moment, and I thought, okay, let me give it a try. And if I do well, I also realized at that point that if you look at the returns to your investment ratio, even at that point, because if you take science, for example, to become a doctor, you need to invest a lot of time plus money, and you can barely enjoy your life until you're 30. But with CPA, if you start it on time, you can finish it in 3-4 years. And by 26, the first job you get, you can pay off all your education investment, especially in India. And having that realization, I'm like, okay, let me give it a go. And that's how I got into finance.
Very interesting. One could say that when you said you didn't do well at your exams, one could think that it also involved math. I mean, in finance, you have to do a lot of math, right?
Yeah.
So when you said you failed, what were you failing exactly?
I was just failing life. I got into all kinds of wrong things. I was not focused. I was just... wasting a lot of time, just going after girls.
Yeah, interesting. I guess you get this question a lot in your line of work, but how does one get rich?
I don't think there's a... I think it's a very simple answer, but also very, very hard to achieve. First, we need to ask yourself, well, what do you mean by rich? I'm thinking financially rich here. And It's as simple as it gets. Keep your expectations low, save a lot, and let the power of compounding do its magic.
Yeah. This whole thing about saving, right? I'm very active on Twitter, so I keep reading a lot of stuff on Twitter. And there's this one guy who said, I think a bunch of people actually are saying this now, where they're like, you don't get rich by saving, you get rich by making more money, right? Because most people are like, oh, if I'm earning this specific amount, let me take, 20, 30% and save it, for a rainy day or to buy something later on. But then that person says, find another source of income that can cover your cost. And then you will have a lot more money to be able to afford different things that you want. What do you think about that?
Yeah, there's two equations here. First one I think is everybody should stay away from this social media influencers who are always like, hey, follow me. I made it rich, this, that. And in the end, it's always like, hey, subscribe to my course. So those are scams. There's no shortcut to becoming rich. Of course, today is very much possible that you can make a product and scale it and all that. But by saving, I meant is even if you make more income, but you do not stay below the level of what you make, you're never going to be happy and you're never going to have enough. So if you want to learn about finance, you should follow like real experts. Morgan Housel has very nice books, The Psychology of Money, and then the new one that came out, I think it's called, I forgot the name. The message is clear that usually rich is to people with hidden wealth, people with fancy cars. He says it beautifully. He says if you see someone with a $100,000 car, that only tells you one thing about that person is that person has $100,000 less now. So really rich people do not try to show off their wealth. It's the opposite. People who try to look wealthy are actually not that wealthy. So it's always staying below your means, staying humble. Obviously, live a nice lifestyle. That's not, in any way, that's not what I'm trying to say is that, don't spend money.
Yeah.
Spend where necessary and always keep your expectations low. If you do not have that, even if you do get rich, you're not going to be happy.
Yeah. Interesting. So you finish school, you have a CPA now. What happens then?
I was always motivated to. This is very cliched actually. So I always wanted to get out of my comfort zone. So I was reading all sorts of blogs at that point, and one that particularly stood in my mind and impacted my decision was this blog by Olivier Emberton. And he used to say life is a game. And the first thing that you can do is increase the map of your area. So what you can do is obviously get out. And a lot of my friends were trying to move to US, to Europe, and I did not want to do that for a certain reason. I was thinking, okay, it's even though it's moving out of comfort zone in a way because it's a culture shock and it's a different society. But I wanted to move somewhere more chaotic than India, and I was looking, okay, where can I go? What could be more difficult than living in India? Because to be honest, it's wonderful, but it can get crazy.
Yeah.
So I was looking over East Africa because it's also good connectivity to India, and then the main idea was to go to DRC or someplace, but also I needed a job. I had no money, and so somehow I found a job in Rwanda, and then I moved here.
Interesting. And you moved here because of a job, right?
Yeah.
Yes. And then how did you fast forward? How did you start your career as an entrepreneur?
Good question. So when I think about it, it was, I never thought about starting my own company. I was happy in the job. It was doing well. I climbed the corporate ladder over the years, and it was a very well-paying job. I had all comforts, like a house, a car, everything given by the company. And then when you build your team, you do not have to do much. You come, it gets monotonous and, same sort of task and this and that. But at some point I felt very, very stuck. I was like, okay, this is really nice. but I was 25, 26 years of age, and I was not growing. I realized, okay, what's next? Also, I was a bit saturated with Rwanda. The lifestyle is great. It's a pretty nice country. I mean, now I have a different view of it. But at that point, I was like, okay, it's a little bit too small for me. Where do I go? And I always used to tell the story to myself, or people who ask me, okay, you're doing good. Why do you want to leave? What's the problem? Everything is good. Then I say, imagine you get invited to a buffet, and you have these 20, 30 kinds of dishes there. You try one, you try second, and it's like fifth or sixth dish, and you're like, wow, this is great. And you would eat like 30, 40% of it, of your appetite, you'll fill yourself up. But then you tell yourself, oh, I really want to try the other dishes. Even if you find one that is really good for you. So it's a curiosity that was like, okay, Rwanda is that dish for me. But I spent like 3-4 years here, and then I moved out. I went around in the region thinking, okay, well, I wanted to be in Africa for sure, because I think this is the future. This is where everything's going to be happening in the next 20, 30 years. And if you want to build exponential wealth or do something great, this is the place to be. So I went to Tanzania, I went to Kenya, and then I also went to Dubai for a little while, and I found a job pretty quickly, but I was not. It was not my vibe being in Dubai. So, and then COVID happened. But before COVID, I was just I took some time off and like, okay, let me backpack around Southeast Asia and see what I want to do next in life. And around that time, COVID happened, so I moved back home. And in that period, being in lockdown, I realized how much I miss Rwanda, and it occurred to me that Rwanda has a very unique dynamics, that Rwanda Revenue Authority is super strict. If you miss a day, if you miss by a few hours the deadline, you get hefty penalties. And the number of accountants, good accountants, is really in a low supply. There's a huge shortage of good accountants. With that in mind, I thought, okay, why not do this? Why not come here? And the idea was to make accounting services affordable. So there was a lot of startups in my network, and I'd made connections before. And every books I saw, or everybody, all my friends' companies, all of them were kind of struggling with their books of accounts. So I thought, okay, the idea is to start a company and make this service very affordable, where people do not have to go to big fours and pay $1,000, because then also it's not financially viable, right? You spend so much in accounting fees that your books are correct, but then it shows a net loss. Yeah. So what's the point? And then that's what I did when the COVID ended, or didn't end, still not ended. But when Rwanda opened its borders, I was one of the first persons to flew in the country. I remember all the travel agents calling me, the Indian travel agents in the country. How did you come here? Can you share your experience? Which flight did you take? I have other people who want to come in. Yeah. And that's how I started the firm.
Very interesting story. You said something there where you said there was a shortage of good accountants, right? Again, for me at BAG, we work with a lot of student graduates, and one of the biggest major that a lot of our graduates come to us looking for a job with is an accounting or finance degree, right? So my question is, what makes a good accountant?
I would say it's basic acumen and attention to detail, and the ability to sit down and not be distracted.
To somebody with ADHD cannot do that.
I think they can, but it's like, okay, how much are you willing to sacrifice with it? Also, it's like if you look at my college life, and when I was studying CPA, I couldn't do much. You just have to study concepts that are not interesting. You have to look at numbers and, okay, this is assets, this is liability, this is where you need to classify this. And you spend hours on Excel and hours in books like this that are not entertaining. And then after, it's great because you see a dynamic of a business that other people usually don't, and you understand numbers, and I think a lot of people I meet, sometimes they think, oh, balance sheet and P&L, and they're like, I don't understand anything. And to me, it's like, it's so simple. How can you not? So, it's like how I think about coding sometimes. That must be so difficult. What is this rocket science?
Yeah.
I think accounts can be for a lot of people like that. So what makes a good accountant? I think that this ability to learn and then practice it for sure. So you didn't ask this, but I would like to add that why there is a shortage of good accountants in Rwanda also is like, okay, I think both the questions can go together. Is there are courses here, and ICPAR does a good job with like training. But every CPA around the world, in India, I'm also a ACCA UK. So when you finish these courses, when you're undergoing the exams, you also have to undergo mandatory internships under a CPA. So in India, you do 3 years under a CPA, learning this hands-on, what you're studying at a firm. And this is what is missing here. So the first 2-3 years, you have to really give it as an intern, trying to learn the basic concepts. Because what you can learn in this book is great, but if you do not do it in a practical life, in real life, it does not add up.
Yeah.
And that's why once an accountant is trained for 2-3 years in their CPA, where they learn, okay, this is how you do this is how you do that, they become a good accountant. That's what we've been doing at the ALCPA.
So you mentioned, one of the things that made you realize that you wanted to start this firm was also realizing that you had friends who are running companies and they're struggling with some of their books. What were some of the challenges that you saw in the beginning, right? As soon as you said, okay, guys, I'm back here, I'm going to start this firm. What were some of the early couple of challenges they were facing?
Yeah. The one thing that I found common in most of the companies as I was starting out was that, they had people covering the transaction, the postings were done, but because most of these accountants did not have training to close books of accounts, you have to reconcile a lot of accounts and prepare a P&L and a balance sheet that makes sense. And that was not being done. And, and sometimes also like the systems were not set up, because you need someone with proper knowledge of how to set up an accounting manual and, to set up an accounting system that, okay, this transaction happens, it gets approved like this, and then it gets posted like this. And without that financial discipline, a lot of like company payments were being paid out of like, okay, by the entrepreneur's personal pocket, and then he doesn't report it to the accountant, does not get recorded. And then in the end, when he asks for like expenses, he sees, okay, there's 20 million expenses, whereas he could have spent like 50 million on the project. So I would say it's a fault on both sides, or none of those faults, none of their fault, because the problem is that accountants were not trained properly to do this, or they needed a senior person, like a proper financial expert to come in and do that, and that was missing.
Yeah. But don't you feel like that's just the reality of starting a business, right? In the early days, you either thought it's going to cost you this, but then it ended up becoming more. And most of the time, it's the founder themselves putting in their own money. So it's one of those things where you're like, is there any business that has ever started with perfect books? Is there anything like that?
I would say people who have had some sort of accounting background can do this right, or people who understand the importance of good accountant. So there have been companies who approached us from day one before even opening a company. So we opened a company for them and we started recording. They asked us the right questions, even though they just came into Rwanda, But they asked us right questions. Okay, what kind of expenses are allowed, what are not allowed? And when you know these answers, or they outsource this to an expert, then things can go well. But also, like you said, I'm not saying that this is a question of what was budgeted, whereas what was spent. It's more of what was spent but not being reported properly. So to give an example, let's say a company bought a lot of office furniture and assets and this and that, but because of certain dynamics of Rwanda, if you do not have particular receipts of that in the name of the company, you cannot put it in the books of the company. So at the end of the day, when the books are prepared and you see that there are no assets, even though the guy spent so much, but those assets are in his personal name now, and how do you rectify that? And he was not thinking, of course, because as an entrepreneur, you're so busy, you're always running around, you're looking for your salespeople, for your product, this, that, and it's always the appointment with the accountant that gets moved or canceled last minute, So
Exactly.
yeah,
very interesting. I want to talk a little bit about. I want to go back to personal finance, right? And then we can come back to business finance as well. So on a personal level, right? So a young guy is just graduated, just got their first job. How do you advise them to become financially, let's say, literate? What kind of steps would they take? If you look back from, early in your early years as a fresh graduate getting into the finance world, what kind of piece of advice would you give them?
It would be the same. What I said in the beginning is when I remember, like when I had no money coming into Rwanda as my first job, and as always I was so much below of my monthly revenue. So my monthly salary, I was spending less than 10%, I would say, until I build up. So you can have multiple sources, but you also can save a lot.
Wait, you were spending only 10%?
Yeah. It's also because my house and my rent and everything was covered. So I would spend just, let's say, 10% on like hygiene and entertainment and this and that. But I did that for 6-8 months before taking my first travel trip, and I was always looking how I can save costs. Doesn't mean you have to be stingy, but I was just not going to high-end places where I see a lot of people who are not saving enough and who do not have a current income, but I see them spending money like that, and no problem if they want to live this lifestyle and be happy with it. But if you want to save and if you want to have enough savings to be able to buy a house, you need to start asking yourself, and the numbers can be scary. I was discussing this with my friend the other day. Average house today, if you look in Europe or India, is like around, Europe would be much more depending on the location, around 300,000-400,000 euros. And let's say in India, it's around $200,000 in a nice location. In Rwanda also, you would have to, for a nice house, you spend like $200,000-300,000. I'm not talking about apartment, but like a proper house. And for that, if you save even $2,000 a month, that means you're saving 24 in the year. That means it's going to take you
10 years?
Yeah, 10 years, close to 10 years to save 250. And with your current income and your current expenses, tell me in your circle who's saving 2,000 a month, And also there's always these liabilities or contingent expenses that you have not planned for, like your pet surgery or medical expenses, or that trip you didn't plan but you have to take. So it's becoming increasingly difficult, Yeah. I'm not even talking about being rich. I'm just talking about having a house.
Yeah. So which is the goal of any young professional to build a family.
Yeah, exactly. So first would be to save enough, and second, have multiple sources of income. So once you start saving the first year, and let's say you have $25,000, and it's I'm not saying anything new. It's all out there. You can read it. You see it, other people doing it. But that invest that money in a passive income generating source. If you do not have time, you invest in real estate or you invest in stock. Or if you have time, you can always do after work business and invest in a non-risky place or a risky place depending on your risk appetite.
Yeah.
And then you start generating more and more sources, and you also save more and more.
That's the only way to be able to buy a house.
That's the only way to buy a house or a short way of making money and making it there.
Yeah.
There are shortcuts and which can work, which doesn't work,
Yeah. But yeah, going back to that point that you mentioned there, which I feel like is one of the biggest ones. I think last week or 2 weeks ago, we had a guest where we talked a little bit about that, where with this new age of social media, it's really hard for a lot of young people getting into the job market to save or live below their means. Because, for example, if you just look at Kigali, right? You go on a Friday or Saturday, you go on Instagram and then you see your friends are at one of these expensive places, right? And there's FOMO, right? When you're young, you're not super wise when it comes to a lot of these things. So social media is like, oh, I also need to go there and go into that place. The cheapest, bill you're gonna get at the end of your night is probably gonna be, let's say, 50,000 Rwanda francs. So let's say it's $50, right? For a young guy who's working at a bank entry-level job, getting, let's say, $500 a month, right? And then in one night, they just spend 10% of their salary, right? So, with this new age of like things, first of all, being very expensive, right? With inflation and everything, things are very expensive, but also with peer pressure, especially with young people. What's the advice there, right? Well, when they're looking at these things, how should they, go back to their bigger goal, saying, no, my bigger goal is this. I can't be bothered by what's happening right now. What are some mechanisms that one can put in place to be able to create this discipline when it comes to finances?
It's difficult, right? It's the same thing as if you ask why many people do not have a nice body. Like you need to, not just when you're motivated at, like January 1st, you tell yourself you have this resolution, okay, you're going to do this, you're going to do that, you're going to save money. It's an everyday reminder. So I think people who compare themselves to others and, have this FOMO, and especially social media doesn't help, I don't think they're going to save money. Even if they do get a nice job, decent job, because they were spending like this when they didn't have, they'll spend much more when they do have a salary, and they're going to live paycheck to paycheck. And that's why it's getting increasingly difficult these days. Some of the mechanisms that you can do is obviously just have strong self-discipline, not comparing yourself to others. You compare yourself to yourself 2 years ago. You try to make the right choices. Going out once in a while is fine. I have nothing against going out. It's just keep your expenses below your means. If you like drinking, you buy a drink and you drink at your friend's house. Just keeping it below your means and trying to save enough and investing the rest of the part.
Yeah. I don't think people understand exactly when people say below your means. Like, what does below your means mean?
Let's say if you're making 500K, at least you should save 100, 150 every month. And I know it can get very difficult if you do not have a good salary, that, of course. But for people who have salary above that, I think in Rwanda it's easy to live and save that kind of money. But for people who like to go out, who like to spend money, I don't think they're saving anything. And most of them, they're always like asking advance, they're asking loans from their friends, and I'll pay you back when I get my next paycheck, and that's just, you can see they're never going to save. They're never going to have another source of income because of that.
Yeah. Are there any things that the banks have put in place to kind of facilitate these kind of things? So, for example, if you really want to force yourself and you know that your company pays you in a certain bank account, where you can tell the bank, hey guys, I know myself. If I see the money there and it's on Friday, I'm going to spend it. So I want you guys, whenever I go there, whenever money gets in there, you just take 50% off. And then I know that it's in my savings right away. Is there stuff like that right now in the financial?
Yeah, I mean, in Rwandan context, the banks are pretty aggressive on giving you home loans these days. So if you've saved quite enough, I think you pay 15-20% down payment, and the rest is financed by the bank, and it's all based on your salary income or other income, and then they can directly deduct from your salary, so you do not even have this money to spend. And the sooner you buy a house with a debt, it's better, because the house value goes up, and the payments are just deducted from your. That's one way to invest. The others, I've not seen it in Rwanda, but other countries, you can invest in stock and put up a payment with your bank. The banks have mutual funds, and you can do SIPs, which is like every monthly payment that gets deducted from your salary and goes directly towards that investment. So if your salary is 500K, you only think, okay, it's 400K because 100K is already going there. So these are some of the mechanisms that are put in place, but it all comes down to you. You can, even here, you can plan these things. There's a lot of social platforms online, and but then again, people think that banks can help you, but no one is here to make you rich other than themselves. So even with these policies, the banks are looking their interest first.
Yeah, no one is coming to save you. So going back on business finance, right? Over the years, you've definitely worked, or you're still working with a lot of entrepreneurs, those who are super advanced, those who are getting started, those who are in the middle. So you've seen all ranges of entrepreneurs. I would like to hear from you, from your experience, the entrepreneurs that you see succeed. What are some of the mechanisms they put in place to manage their finances better? Like, what have you seen as opposed to the ones that, I don't know, they were your clients and then they eventually died out, or they got into some financial trouble? What traits do they have that give them a better chance of succeeding?
I think it's again the discipline. I think the entrepreneurs who have succeeded is always like, okay, at the end of the day, as far as finance goes, even if they're tired after all the meetings and all the work, they make sure that they update their sheets to track their expenses. They take out time at the end of the week to look at the week's progress. That, okay, where their revenue stands, where the expenses, have they approved the budget for the next week, and where can they cut down costs? So if someone who's not actively doing this planning is bound to fail. I mean, it also depends. Sometimes it's like the market is not so competitive here, I would like to say, compared to like the Asian markets that I've seen. So even if you don't do these things and your product is great, you're still doing good, but you can always do better if you take out this time to plan. So it's always people who take out that extra time off of their weekends or on Friday and go to these sheets, this boring part where, okay, to know which clients owe you money and going after them, or like just doing this reconciliation. I know nobody likes it. Even like I have an accounting company, so if I at the end of the month when I have to explain the credit card receipts, sometimes I'm like, okay, I can do it next month. It's not going to slow my business down or anything. So it takes that core discipline to be able to do it. And I think people who are disciplined, who reply to their emails the same day, even if it's late in the night, are the ones who do it.
Yeah. What do you think is the difference between an SME and a startup from a financial standpoint?
It's just definitions. I never ask these questions, to be honest. Okay, by definition...
Because I have a follow-up question on that one.
Yeah, SME is categorized already as a business, as small and medium enterprise. Like it can have different definitions based on the jurisdiction and the country or the industry you're in. So in Rwanda, I think anything that has turnover over 20 million, so it's related to sales. But startup could be something that even in the first year they can make a lot of sales, but it's like a complete unique idea. That's the definition according to me.
Yeah. So I think the definition according to me, because I work in that sector a lot, in the sector of startups, it's basically, if we look at it from a financial standpoint, an SME is a company that has, let's say, a product that is well defined and has already a price. So you see, for example, if you look at it from a technical standpoint, if you go into the EBM, setting up the EBM, you can put in the price of the actual product that you sell, right? Because you bought this microphone for a certain price, you add on your profit, this is what it is, right? It's very clear. For a startup, it's very different because in the beginning, you're trying to do something new. So most of the time, you don't even have a price for it. You're like, oh, we're going to negotiate with a customer. We're going to try to find, where
a price point,
a price point, right? But also at the same time, it's very hard for you to understand how much it actually costs you to even produce it, right? Because there's human, there's intellectual, capital put into it. You have to develop a software, and then you have to start understanding exactly how much does it cost you to buy it, all that stuff. So, which means that the difference that I see is that an SME in the beginning, an SME founder starts with saying, yep, I need to make money from day one. As a startup founder, they say, no, we do not care about making money right now because we know we'll make a lot more money when we actually solve a huge problem in the market, right? It's like going in the science lab. We're trying to find a cure to COVID. We're going to do many tests. We can't charge people for this product because it's not fully developed yet. And then once it's done, we can sell it to a mass market. So I think that's where I'm trying to look at it. I want us to look at it from that angle when it comes to, those founders who come together like, hey, we don't have a lot of these things in place. We're going to probably just spend a lot of money for the next 2, 3, 4, 5 years before we can start generating money and we can start, understanding these books. Have you got some of those clients before, founders, as opposed to those who are saying we want to make money from day one?
No, most of my clients who are in startups, they just want to do good. None of them wants. No, I'm joking. I think that usually the goal is to like have financial wealth, yes. But I think most of my clients they have a price point in place. Yeah. It's just how realistic it can be, So if you don't, sometimes things can be very expensive in Rwanda, and if you're running loose from your budget, you're just spending, and then your costs come something, and you just add your percentage profit on it and arrive at your sale point price. And it can work, but usually it can also be too expensive if your costs are not in check. And that's what I see with a lot of companies in Rwanda. So, something that would cost, let's say, $10 abroad is costing $40, $50 here is because of the inefficiency in the company that's making it here, So, yeah. Yeah.
But what's your advice for a lot of those founders, right? Again, looking at it as an entrepreneur now, not just as a finance or accounting expert, but as an entrepreneur. People who say, what's the advice? Is it make money from the get-go so you can, sustain a healthy business? Or is it, depending on what the business is, you have more time to kind of like figure out?
Yeah. I don't think I can advise anything here. It mainly depends on the entrepreneurs themselves, what they want. But obviously there are limitations with the cash flow they have. So if they are building a product that takes time and research is supposed to go into it and they have the cash flow to survive it, sure.
Anybody who's looking into getting started in entrepreneurship, right? To become an entrepreneur, either from the story that you shared, how you transitioned from an employee and you wanted something more and more challenging, what advice would you give them, right? Yeah. Despite whatever they're trying to do, what would you say when you look back?
I would say do it.
Yeah.
It works. It doesn't work. It's great. So there's a lot
of risk.
Of course, and that's my philosophy of living life, right? If you do not take risk, everything is safe. Do you have an interesting story to tell at the end of your life? That's too philosophical. But anyways, what I'm trying to say is, it makes everything interesting. It's like, you have no money, you started this business, and you're on the edge, right? You need to make something work. So that kind of stress, if you take stress healthy, it can really transform you as a person. When you come on the other side of the table, you also understand a lot of equations. Let's say you have been an employee all your life, but now you're on the other side. You also realize how much power can an employee have, So you start looking at things differently. You go to a cafe and you don't see, why this coffee is like $5,000. You start saying, this guy has so much cost. How can he make money just by making this margin of, let's say, $2,000, $3,000 per coffee? So, it makes everything interesting. It grows you as a person. So everyone should try it, I would say. But also it comes to your personal goals. If you are a relatively risk-free person, you're happy with your life, I'm not the one to say that, go out, take risks, is that. I also like to normalize, simple living, You have a decent job, you like your job, you do it, you have balance in the end of the day to see your family, friends, this, that. Because obviously once you start a company, you will not have balance. You know, first few months you have no money, no sleep, this, that, everything can go wrong if it has to be, you know. It's different. But what was your question was it if people should do it, or are there any advice?
How do they manage risk?
Yeah, how to manage risks.
Yeah. What would you do differently, let's say, or improve on with what you know now?
Yeah, so I'm starting a second venture recently, and some of the things that with the experience I've had over the years, I would always advise people to always first look into the amount of capital you need to do something, and don't start things where you are cash strapped. I mean, there's one thing, there's necessity, you know, you're out of job, you need to do something to make money. Nothing applies in those scenarios. But let's say you have resources at your end, you're informed, and you're jumping into a business. I would say it's very important to take at least 1.5 times the money you actually need. So, you know, and take into account working capital, take into account like 6 months of salaries of staff, this, that. So even if you don't make anything, you can sustain your business for 6 months. And how I like to do it is give my everything for the first 6 months. 100%. You have the resources, you have the money. Now you need to make it work for the first 6 months. And whatever you generate from that, okay, you can last another month. But you also tell yourself you're not going to put any other money, yourself or other investors, into it unless you're expanding. That's different scenario. So then what you're doing here is, first, you're making sure how much time you're going to give to this project. And second, you're telling yourself, if everything goes bad, okay, I lost this much of my capital and my investors' money. But then you don't put any more energy into it and you try something else. It's not always that, okay, even if a plan is fail-proof, this, that, you have tried everything, but still, let's say COVID happened, you know, and there's a lockdown. There can be anything that's not planned. So in those cases, instead of burning out and losing everything, make sure you minimize your losses, and then you put a time frame to it. Yeah. You plan things.
Well, one could say that after those 6 months, entrepreneurs, right, they're very idealistic. That's one of the traits of entrepreneurs. They'll say that maybe if we put on another service, if we add on something else, it will work, right? How does that fit into what you just shared there?
Yeah, I would say it's just policy, right? If something has to work, it can work in 6 months. I mean, depending on the business, of course. If you're starting a car manufacturing, you're going to need much more time. But let's say you're starting a cafe or a small business where instead set apart the time for installation, this, that. From the day of commencement of your project, if you don't see significant results in 6 months, I don't think anything can change. Obviously, you can learn from that thing. Yeah. And you can see, okay, this works, this doesn't work, and you can modify it. For example, in my early years, the idea was to start an audit firm and make it affordable, like auditing books, this, that. But when I did the project evaluation with the amount of clients I had in the first year, I would not even be able to pay the rent off, and let alone the salary of, CPAs. They are expensive. Yeah. I don't mean expensive, but they're like, to give them a proper salary. So what I try to do is, I try to start an accounting and a CFO division. So I was personally doing CFO services for a lot of company, and I was pulling that money inside here because I thought that can work, and that did work. It increased my network, and I sustained my company the first 1.5 years until I grew more clients. So if you see prospect of another service that can work, sure. But do not fool yourself into like, if something is not working, keep putting money into it. Because I've seen companies doing that over the years, like first 2 years didn't work, third year, you need to try something else.
Yeah. And what is a sign that it's working and it's worth continuing? Is it break even? Is it profit? What is it?
Very, very good question. I would say first is always obviously making a profit. So, you do your monthly P&L and you see, this month you covered your expenses. So break even, and then it goes up from there. That tells you, but then also the other thing it tells you, is this scalable? What you have achieved now, can you scale it? So let's say, speaking of my firm again, if I need 10 clients to make break even for my expenses and salaries, can I have 30 clients and make a lot of profit? But for 30, I would need to employ much more things, and Is it scalable? Can I put my time? Do I need additional partners? All of those things you have to consider and see also how much can you scale. Because you're a small firm, people will give you this much companies, but once they realize, okay, you have over 100 clients, can you manage it and this and that? And maybe it's not scalable after a certain point because you can only reply to certain emails and, so.
Yeah, we can use AI to make the process faster.
Yeah.
Yeah. So what kind of services does your firm offer right now?
So we do everything related to accounts. We prepare books, we do bookkeeping services, accounting, tax filing, tax advisory, we do audit. We also do CFO services, but depending on the capacity and the business. If we see we can make an impact, great. Otherwise, not really. And then we also do a lot of structuring with KIFC, so Kigali International Financial Center has a lot of prospects in place right now to create a holding company here where you can actually benefit from the tax regime. So we help companies restructure and create holding companies. And we also do a lot of fighting with RRA. So if you need some heavyweight to present your case to RRA or get your VAT refunds or, process your applications, we do all that.
Yeah, but there's always this time in an entrepreneur's life or in a business where you're like, this time was actually when I felt like, okay, like we've really made it. Could be the first clients, could be the first dollar.
Yeah. So there have been a couple of incidents like that, and I appreciate your question. When I look back, I think obviously hitting the first mark when you say like, okay, I wanted to achieve 100 million in sales, and when you do that, it's a great feeling that you kind of made it. But more than that, the real happiness came when you get great feedbacks about your employees. So I would be honest, in the first year, it's always like that message you get about, credit of a payment. You're like, okay, $200 credit, this the credit. You go, oh, wow, money's coming in, things are moving, good. After that, it's just, in the beginning, it's nice. But after that, you want to see how sustainable your business is and how your main assets are doing. So for us, our main assets is our employees. That's where we invest our time in training them. And the way we do it is we take a lot of freshers out of university, and now the system is there where they get in as an intern, they get trained by junior accountants and move to junior accountants position and get trained by seniors and then managers and then become manager themselves. So there is this particular batch where I got these people who are petty cashiers in a lot of firms, and if they never received another form of training or they wouldn't push themselves, they would stay petty cashier. Maybe their salaries would increase in the form of inflation, this, that. But after spending a few years and getting trained at the firm, now they're doing fantastic and they write great emails. They understand the complex accounting transactions. And when they're able to do that and you get a message from your client at the end of the day, oh, she has been fantastic. That's the most proudest moment for me. Yeah,
that's amazing. What's next for Akash?
In terms of years, I don't see more than like a couple of years far, because anything can happen. But for this year, I'm starting a couple other ventures, and for me, the goal for 2024 is to just work hard, do as much as you can, and not think about anything else. Okay, results can matter, this, that, but at least let me give my 110 this year. Because all the years over this, I think I've been distracted. I have a passion for traveling, so I traveled a lot last few years. I've been to over like 30 countries now. And before that, it was always like education, this, that, growing up. Something keeps coming in, But for this year, I have the time, I have the capacity to just give it 100%. So that's what I want to do, just be busy and keep hustling.
Yeah. How would your partners at your firm describe you in 3 words?
What are you? Why I say this is because sometimes it's like I manage to get deals and do stuff, and then it's not very humble to say this, but then the reaction is like, who are you, man? How did you do this? You know. So I think that's one of the reactions I would say that they give. Yeah.
That's one. You have two left.
3 words you said.
Yes.
What are you?
Oh, what are you?
Yeah. That's why I said this. You know?
Okay, that's good.
Yeah.
All right, Akash, thank you so much for sharing your wisdom on how to build personal finance, business finance, and just your amazing story.
So it's been a pleasure, Yusuf. Thanks for having me.
Cheers.